That capital is analog capital from the 20th century, and Bitcoin represents the digital transformation of capital. And your chart you just showed with those ETFs shows that every day in the last 5 days, $481 million is flowing out of the analog world into the digital world.
Do you really think money is economic energy? Well, of course, money is what we need to do everyday things, so indeed, it is economic energy. Listen to Michael Saylor speak more about this.
It is the question of our time, Charles, and it's a question that I went most of my adult life without understanding. But economic energy is capital. Economic energy is wealth. And so if you think about the wealth in the world, there's maybe $900 trillion of it right now, and it's tied up in real estate, in stocks, in bonds, in currencies, collectibles, etc. The challenge is that capital is analog capital from the 20th century, and Bitcoin represents the digital transformation of capital. And your chart you just showed with those ETFs shows that every day in the last 5 days, $481 million is flowing out of the analog world into the digital world. And what's going to drive Bitcoin is, in essence, the conversion of analog capital to digital capital. The killer use case is capital preservation and capital appreciation. And, the name of the show is making money. That's what everybody wants to do, and money is capital. Rockefeller gave us liquid energy.
John D. Rockefeller was an American business magnate and philanthropist. He was by most definitions the wealthiest American of all time and the richest person in modern history, primarily involved in the oil business. In the late 19th century, he founded the Standard Oil Company, which became one of the largest and most influential oil refineries in the United States. Standard Oil grew rapidly and gained a dominant position in the oil industry. Saylor tries to relate John D. Rockefeller's business in oil as the liquid energy of its time and that Bitcoin is the digital energy of today's world. Let's get back to the video.
In the form of oil, Bitcoin is digital property. It's conveyed by digital power. Those Bitcoin miners are digital power providers, and it's the most powerful computer network in the world. So we see this as profound because there's hundreds of trillions of dollars of wealth in the analog world, and there's no doubt it's decaying. Bonds are losing value because of inflation. Real estate's losing value due to just physical decay. Stocks lose value because of competition and product cycles and acts of God. And so the people of the world, they're looking for a new idea, and Bitcoin is this idea of put your money in cyberspace where it's not going to be affected by weather and war and supply chains and all of the things that have plagued us in the 20th century.
Rebranded itself, I think it's called now Bitcoin Development Company. What exactly does that mean, and are you moving completely away from the traditional business?
MicroStrategy since 2020 has bought over $10 billion in Bitcoin. Because Bitcoin is seen as a store of value over time. What else could be more important than to hedge against inflation as fiat currency continues to lose purchasing power over time? Let's listen to Michael Saylor as he speaks on rebranding MicroStrategy to Bitcoin Development Company and why the rebranding was necessary.
Now, we've got a very healthy software business, but we've now got nearly $10 billion in Bitcoin, and we've got a very large equity market cap, and we can tap the capital markets as an operating company, and we can leverage our market cap in order to issue equity, issue debt, buy back our debt. We can restructure our capital structure so that our shareholders get more Bitcoin. So just like, you want to develop New York City, you're going to borrow money and you're going to build a building. What we're doing is we're issuing securities in order to buy Bitcoin, in order to promote the Bitcoin network, lock up the Bitcoin forever, and then build the entire ecosystem.
Tom Lee, on CNBC yesterday, says he sees Bitcoin hitting $150,000. Tom Lee is a managing partner and the head of research at Fundstrat Global Advisors. He is an accomplished Wall Street strategist with over 25 years of experience in equity research, and has been top-ranked by Institutional Investor every year since 1998. The ETF launch is one of the best positioning for Bitcoin, as it brings a lot of inflows into the market, making demand for Bitcoin heavy. In basic economics, more demand means higher prices and more supply means lower prices. Even as we approach the halving, the supply of Bitcoin will be cut in half. Let's go back to the video and listen to Tom's analysis.
I think it's, could be as high as 150,000 this year.
So double what I thought was.
Yeah.
150,000, so we're tripling at this point.
Yeah, because you've got demand improving with the ETF, and you have the supply shrinking with the halvening. And if monetary policy eases, which we expect, that's supportive of risk assets. And Bitcoin's holding up. I mean, that's another reason why I don't think a drawdown's going to start that soon. I mean, Bitcoin's been rallying the last couple weeks.
Wow.
So
take that to the bank.
those are big numbers. I don't know anymore.
And are you in, hold on, let me just go back. Are you in the camp of this is like a $500,000 valued?
Over the next...
Over 5 years, are you?
Yeah, it is sound money. And I think it's proving to be useful. And
Proving to be useful how?
Well,
it's very useful if you're an investor right now.
Yes, it's been a great store of value. It's been a good risk asset. It's also incredibly secure. There hasn't been a single fraudulent entry on the blockchain since inception. I don't think any bank can say that's true of their P&L and accounting. 6% of banking transactions are suspicious, 0% on the Bitcoin blockchain.
What did Gensler say the other day, that he trusts the Oracle database more than the blockchain distributed ledger? That was bizarre, wasn't it?
Well, I mean, the blockchain is just one big piece of software, but I would trust the proof of work concept that you now, instead of having 5 people manage an Oracle database, you have a consensus mechanism, and that's what's kept
So, but Tom, here's the flip side of that, and you've heard it from the Jamie Dimons of the world, maybe even Elizabeth Warrens and others who say, despite what you said about sort of how good the blockchain is to be able to find where things are, it is the medium of choice for ransomware. I mean, just you go through the list of sort of terrible illegal behavior. People in that world seem to love Bitcoin. What does that say about this?
Well, pirates were the first people that liked gold, so we knew gold was a good store of value. But I think equally important, the dollar is used in more illicit activities.
99.
I know we talked about that, obviously.
99.9.
And Joe's made that point before, but you don't. So you ascribe nothing to the idea that Bitcoin is a beloved currency for those who are trying to do nefarious things.
Well, here's a way to think of it. Criminals don't trust anybody, but they trust Bitcoin. And so if you want to say what is a trusted asset, it's really what would be the least trustworthy code.
Michael Novogratz was also on CNBC yesterday. In his talk with CNBC, Michael says the current inflows into the ETF are transactions initiated by the baby boomers generation. Baby boomers hold a considerable stake in the wealth distribution of the United States. This demography of people are taking the opportunity in the ETF to own Bitcoin. Consequently, are investing a lot of money into Bitcoin ETF. As more adoptions happen, the price will continue to rise. Let's hear what Michael has to say as he speaks to CNBC.
From the institutional space, given where you sit and actually the institutions that you're talking to, where are we in that process?
Listen, we've come a long way fast, both in U.S. stocks and in crypto. I mean, crypto, it's almost felt too easy, right? We've gone up almost every day. And so it wouldn't surprise me if there's some consolidation, right? Trees don't grow to the sky. But I think the big story is we've now opened up the institutional, really the RIA community, right? $45 trillion of wealth are managed by brokers. And, we've got baby boomers who own most of the wealth in America, and they're getting their first easy access to Bitcoin. And you're seeing it through these ETFs, the massive growth in a very short period of time in this whole ETF complex. And I don't think that's going to stop, right? Last night we had $135 million of inflows after that slowed down from 400, 350. Paul Tudor Jones taught me early on in my career that prices get set on the margin. right? And so when we've got more buyers than sellers, prices go up. And I see a kind of a constant, these are hodlers as well, right? These are guys that are buying, put it in their portfolio and hold. They're not traders. And so the ETF buyers in general that are coming through these RIA channels, I think are taking supply off the market. So I still see Bitcoin ending the year a lot higher.
Can actually recommend Bitcoin as a product today versus how many will be able to do that in 6 months from now?
I don't have a perfect answer, but I would tell you at least double in 6 months, right? There are big channels that still aren't turned on, that we know they're going to get turned on, right? We're in conversations with them. These are the big platforms. And like there's an inevitability to it. Why? Because their customers are calling and bitching at them and saying, we want to buy Bitcoin with you. And so then the sales guys who get paid for selling stuff are screaming at their bosses. And so I'm certain it's going to happen. Like this is not, it might happen. It is going to happen. It just takes time. These organizations are very conservative in general. And, you know, crypto scared the heck out of people 18 months ago. And so there's still scar tissue. You know, it's surprising that we have a approved, U.S. sanctioned Bitcoin ETF, and it's still very difficult for a lot of crypto companies just to get banking services in the U.S.
If I asked you to make the downside case for Bitcoin, what would it be in your mind?
45,000, 42,000.
And what would get you there?
It could be some regulatory kerfuffle. It could just be the market got a little long and you get people scared. I don't see that as a high probability, but we broke out. You can just look at the chart. We kind of broke out from 45, and so pushing through where you broke out from happens often in markets. It's not supposed to be easy to make money. You got to get scared a few times, and that's what's been so impressive about the real core Bitcoin community. Like they just take the pain and buy more. I mean, there's such a belief system around this asset. But it wouldn't surprise me if something happened that we're not paying attention to.
So Tom Lee was on the broadcast earlier this morning and said that he thinks this could be at $150,000 a Bitcoin by the end of the year. What do you think?
When markets get new buyers and start breaking out, it's hard to have a price prediction. I do think we will test the old highs, in a relatively short period of time. And if you take out 69,000, usually you don't go right through the first time. You'll touch them and you'll come all the way back, and you'll be mad you didn't sell something, and then it takes off again. But once you break 69,000, listen, it could measure to 150,000, right? 125,000.